So the first prediction, and I know a lot of people are upset about it, is it really is that the power law is not going to break. Now, why am I so completely convinced about that? I think, it's very simple. First of all, if you look at the power law just in and of itself, you can easily think that it's wobbly and everything is going to change with the ETFs or sovereign adoption or Bitcoin strategic reserve, but I don't think so. I think it is not likely to change, and I'm going to give you a little bit of a background on that. And I really think this thing that I posted a while ago, this one here, okay.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Fred Krueger shared his 5 Bitcoin predictions for the next cycle and more.
This is here the 4-year average of the log price. Okay, so what did I do to get this? I took the Bitcoin price, I converted it into a log price, and then I averaged that log over the last 4 years. And you can see, and so this is the log of time here, and this is the log of Bitcoin price. Now, if you go to 5, that's $100,000 of Bitcoin, 10 to the power 5. 6 is a million, and we have seen that this smoothed out average log BTC price is a straight line, and the next 4 years it's going to depend. The first part's going to depend on these prices here because you're going to be averaging some of these, but where it's going to end up is going to be completely independent of any of this data. So if we go to 10 to the power 1.3, and that number is 19.9. So let's call it 20 years. That is 2029. We see that we're going to get, about 500K. All right, a little bit under 500K. It really doesn't seem like this path is going to do anything then continue. So that's my first real post. The second thing I will say is that MSTR is going to stop. They're really going to tap out in the next 4 years at about 500,000 Bitcoin. They're not going to get to 1 million Bitcoin. And I think this is important. I think MSTR has talked about deploying 42 billion. They're going to deploy that 42 billion over 2025. And they're going to continue. But let's just say they deploy 100 billion. They're not going to be able to buy 300,000 Bitcoin with that 100 billion, right? They just won't be able to do that. Unfortunately, the math does not look really great for MSTR. They already have a valuation that is in excess of the current market valuation of the Satoshi stack, which is 1 million Bitcoin. They're currently valued as if they had 1.2 million Bitcoin in their treasury. They don't. They have 350,000 Bitcoin. So I don't think they're going to be able to buy the next 300,000 Bitcoin for 100 billion. I don't.
Researchers have pitched a new theory about Satoshi Nakamoto, that the Bitcoin creator never went dormant and has been strategically cashing out from early Bitcoin wallets since 2019. In a November 19 post, Bitcoin research firm BT Parser said that there was a trove of Bitcoin wallet addresses created in 2010, each holding 50 Bitcoin, that never transferred until the first awakening in November 2019, which they have called the 2010 mega whale. BT Parser's theory suggests that Nakamoto owned these wallets and has been slowly selling the stash while deliberately leaving the 2009 wallets alone to avoid drawing attention. It leads me to suspect that the enigmatic 2010 mega whale might actually be Satoshi, BTC Parser said in a November 19 post. Still, it remains a theory, not a conclusion, BTC Parser added. If Satoshi is behind these 2010 wallets, it paints a picture of a creator who planned meticulously to ensure their privacy, BTC Parser said. If Satoshi has access to a treasure trove of 2010 minted coins, there's no need to touch the original 2009 wallets. Using these later coins avoids drawing attention to the original stash, preserving anonymity and reducing the risk of revealing Satoshi's identity.
The third prediction is I think there's going to be a bear market of something like 50% sometime in the next 3 years. Now, for those of us who've been around and who've been through some of these cycles, 50% is nothing, right? We've seen 75, 80% bear markets. I think this one will be less. I think it'll be probably something more like 50%. But I do think we're going to drop 50% from whatever high we make in the next 3 years. I also don't think this is going to happen in 2026. I think it could happen in 2027, 2028. I sort of believe that there's going to be some form of a super cycle. I don't think that the next cycle is going to be dictated by a mining halving related timeline. And I think the net of this is the power law is going to be respected. And if and when we get this bear market, I do believe that MSTR will crash a lot more than Bitcoin. So I do believe MSTR is going to go down much more than 50%. And I think it's going to revert to a multiple of 1 or even lower. I think it could trade at a discount to fair market value. Now, some of the MSTR fanboys are going to say, well, at that point, they can buy back MSTR. They can do all these things. But, we'll see when that happens.
Bitcoin headed toward a pivotal low on November 24 as manipulative traders sought to keep $100,000 out of reach. After struggling to beat out sellers immediately below $100,000, BTC/USD saw order book spoofing return to exchanges over the weekend. This came in the form of walls of ask liquidity placed in such a way as to entice the market lower toward support. Ask liquidity moving lower with price $99.5 thousand. $99,000 ask walls. Fresh ask wall right above price here, which likely was removed, already tilled spoofing on the ask, Trader Skew said in his latest market analysis on X. This spoofing often in illiquid hours forces bots to sell, leading to lower prices. Skew noted bid liquidity lined up at $95,000, but it was $97,300 that formed the pivotal low from recent days. We'll be looking for signs of passive buyers, he said. Those selling, which include long-term holders, realized record profits on November 22 as Bitcoin hit its latest all-time highs of $99,800. Martin, a contributing analyst at on-chain analytics platform CryptoQuant, reported the daily tally of $443 million. Unrealized profit levels are elevated, currently sitting at 57%, he said in a further X post on November 23. This is approaching the March 2024 peak of 69%, signaling an increased probability of a price correction. Caleb Franzen, creator of financial research resource Cubic Analytics, contributed a bullish angle to a market already up nearly 50% in Q4. In his latest blog post on November 23, Franzen reiterated his $175,000 BTC price target for 2025, describing the Bitcoin bull market as right on schedule. Sure, we're tracking towards my target, but Bitcoin still needs to gain plus 77% to get there. As an FYI, BTC is up plus 77% since September 9, 2024, he wrote. An accompanying chart compares bull market performance this year to others in Bitcoin's history. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.